Welcome back to Echo Trade. It's Jeff Roth. Today we got Chris Walker from Walker Capital Advisors. Chris has been working with us for a while, but he's putting a new portfolio up on the platform, WCA Small Cap Growth, and we're here to learn about the portfolio. So Chris, appreciate you being here. How's it going, man?
Doing well. Great to spend some time with you again. Always good to chat.
Yeah, and Chris has been impossible to get a hold of, but for great reasons. His business is growing like a weed. So he's just, every single time I talk to him, he's got to push it off. But that's all great reasons. And I'm happy that's happening, and we're always happy to have him as a partner. So let's talk about the new portfolio, kind of taking a little bit of a different angle than you have been with this portfolio. So kind of give us the kind of 30,000 foot overview of what you're trying to accomplish. Obviously we're going with a small cap growth portfolio, but what is this for? Kind of who's it for, and what's the overall goals of the portfolio?
Yeah, happy to tell you anything you want to know. We're building this portfolio with folks in mind who want to be aggressive, who are willing to and capable of taking on a little bit of risk. We're trying to set the portfolio up so that we're not taking outsized risk. We're certainly monitoring the Russell as a benchmark, but generally speaking, our goal here is to outperform that by finding the right companies that fit that growth categorization. We've gotten some great results the past couple of years with this portfolio as we were sort of testing part of the sort of blended approach, if you will, between quantitative and qualitative. And we're ready and really excited to get this in front of some folks who might find it really interesting. A great way to learn about some smaller companies that get a little less coverage for sure. And hopefully, more than anything, a chance to generate some great returns.
Yeah, and you talked about, kind of looking to outperform. And so talk about, I guess, for people who don't know, kind of what you're looking for and what the purpose will be in investing in small cap. You're kind of looking at smaller companies that, ideally have the option or the opportunity to grow maybe faster than some very large, kind of blue chip name companies.
Sure. Yeah, I mean, one of the criteria for us as an investment in this fund is a more than 100% expected return. So we're looking for companies that have massive upside potential. So if it's not going to double in size over the course of our investment horizon, which is 3 to 5 years, it doesn't make the list. So these are big returns we're shooting for. Trying to hit a home run, if we're using a baseball analogy, not just get on base.
Yeah, it's fantastic. So maybe for somebody, maybe who is it for, right? Maybe not for somebody who's looking for very conservative kind of, low risk. You're taking a little risk because they're smaller companies, but they have the opportunity to grow so much more. So kind of, again, not giving advice on, hey, this type of person should invest in this, but kind of who typically might this be for?
Yeah, the people who have found this that really fits their profile are in reasonably healthy financial shape, and so they're willing and able to take on risk. And when I say willing and able, let's talk about both of those terms. Able is obviously this should not be all of somebody's nest egg. This is probably not something you want to do. You want to put funds in that you have a specific, very short-term purpose in mind for. So this is going to be long-term growth capital in your portfolio. And then when I think about willingness, like this is going to be for somebody who has a little bit of acumen about them around investing. So they sort of know what to look for when they get information on companies that are in the fund around price to book ratio, PE ratios, and other pretty common nomenclature. They should know what that means and not have to spend a whole lot of time investigating and learning about those things. This is for probably a little bit more savvy investors than most.
Yeah, and I think also you kind of look at it from on two sides of the spectrum, kind of younger investors and older investors. And again, not giving advice, but you kind of look at the older investor, like you said, they can still utilize this as part of a sleeve, of their portfolio. But something that can give some outsized returns, and hopefully, but there's also going to be more risk there. But you can afford to kind of have more risk in just that portion of your portfolio. And the same thing for a younger investor, but they're able to kind of withstand more risk because they have a longer time horizon and they're looking for kind of more growth. So talk about it. Previously, you guys were looking more on still small cap, but kind of utilizing ETFs, if I'm remembering correctly. Now you're kind of looking at individual companies.
That's right. We found what we think are some really interesting criteria to build I don't want to say algorithm, but there is a sort of a blended quantitative and qualitative approach to this. So we found some things that will at least give us a good screening criteria. And then we have a model that we use to help us determine, really what's that upside potential here. And so that's pulled us away from the approach with ETFs, which is a little, I don't want to say less risky, but it is less, I'd say, idiosyncratic risk because we're not investing in individual companies, but rather in that case, we were investing in a range of companies that fit a criteria that it together sort of in the aggregate created a very similar structure to what we have here. But in this case, we're leaving the ETFs off of this entirely, leaving all of the pooled investment options off entirely. These are individual companies we're buying to build this portfolio ourselves.
Yeah. And about how many names, how many companies are typically within the portfolio at any given time?
Yeah, right now 47 names, but we have found a way to pare that down to the top holdings. So we also have the top holdings available for folks, if they want to take that approach. That's 12 names.
Yeah, interesting. Yeah, and that's nice and concentrated, and you have strong conviction, I would imagine, within those, like you said, the top 12 companies, but still within 47, you have strong conviction on those. And so, what does the process look like? Like you said, you're kind of, here's the universe of small cap companies, and how you guys kind of funneling it down to the top 40 and then the top 12.
Yeah, we're looking at a list of companies that fit the criteria. We'll pick them apart internally once something fits the criteria. Obviously, the categorization, the Morningstar style box has to match for sure. But then beyond that, we're looking at we're taking a deep dive into their financials. We're reading what analysts are saying. We'll also try to do a little bit of due diligence ourselves. If it's a product that we can use in some way, obviously we do that as well. Probably no different than what most of the investors, most professional investors would do. They're going to dig really deeply and try to dig in there. For us, the financial model is really the sort of linchpin in terms of whether or not we make an investment. We would want to see, on a pro forma basis here, something that is, as I said, going to generate at least 100% returns. We should be doubling the investment that we've put into something over that horizon. Not all of them will win, of course.
Yeah.
Not all of them will hit. I mean, that's unlikely. That would be amazing, but that's just unlikely. The way the portfolio is structured, though, if one or two of the companies that we pick will hit, we have a really good chance of outperforming the benchmark. I'll give you a really good example. We made this investment in Guardant Health a couple of 2 years ago, and that return last year, I believe, was 53%. So we didn't need, it didn't even hit all the way to our target, but it did so well that it pulled the rest of the portfolio performance up. And it's just been a real bulwark for us. So we're looking for companies like that. Like I said, home runs, not just getting on base.
Yeah, exactly. I mean, you're kind of a step up from the venture capital model, right? And that's really, you invest in 100 companies, one of them hits unicorn status, a few of them kind of, are profitable, and then the rest, kind of really fail, and you lose your money on that. But you're wildly profitable because of, just a few of those home runs. And this is not quite as risky as that, obviously. Yep. It's definitely, but it's not, again, on the spectrum, not on the large cap, sure, the Apples and the Microsofts and the Teslas of the world. But you're definitely looking for some of those home runs that are going to really kind of outweigh, if you have several losses as well, because you might not lose that much on the losses, but you make so much on the winners.
That's right. We think there's a real information arbitrage with the smaller companies. That's pretty standard for anybody who's investing in small caps. But look, there's a lot less analyst coverage on the small caps. And so, we think we can get out ahead of that. If I've learned anything in my time here, it's not necessarily being right. It's about being right before everybody else figures out that you were right. That's the point. And the lower analyst coverage actually works in our favor in that way.
Yeah, interesting. And we were just talking about AI. Let's kind of cap it off with this. It's obviously a massive, market. It's in all the news. Everybody's wondering what AI companies to invest in, or also how to utilize AI when building portfolios and building any kind of technology. So what's your guys' perspective on that? And are you utilizing that, or are you looking to utilize that or invest in AI types of companies?
Yeah, great question. First of all, both. I mean, we definitely use it to build, to help. We've used it to help build out our the quantitative piece of our model. For sure. So we are absolutely leveraging as much wherever we can, whether it's getting just quick downloads of analyst reports or actually using it to find holes in the model. We're using AI as much as we can, for sure. We see it as an inevitability, not necessarily in a bad way, in a very good way. The second thing is, if I put on the screen all the different industries that are covered by the Small Cap Growth Fund, you're going to see a range of industries. One of the things we notice, though, is that even in, say, consumer products or in healthcare, we see a lot of AI infusion into their future growth prospects.
Absolutely.
So we're also looking for entrepreneurs or CEOs, boards that are aware of and are embracing AI as much as possible to try to drive future performance for their companies. So we certainly use it, but I also know I should see some reference to future AI impacts to the company as I'm looking through their data.
Yeah, absolutely. Well, this is fantastic. We're excited to have the portfolio on the platform. I love kind of the transition you've made previously, and I'm excited about the opportunity for outsized returns with this kind of portfolio. So, Chris, always stoked to talk to you, man. Super excited about the partnership and moving forward, and congrats again on the growth the last couple of years.
Thanks so much. Really enjoying this platform and happy to have this opportunity. Looking forward to some great returns.
Thanks, Chris.